Okay, now let us understand what is the accounting process of calls in arrear. Now we know calls in arrear happens in only in case subscribers not paying the amount called for. So it can happen at what stage? Either at allotment or at call stage, because application money first comes along with the application form. In the application, there cannot be any calls in arrear. If somebody is not paying the full application money, it will be automatically rejected. So after allotment, when the allotment due is sent, some shareholders may not have paid the allotment. That will be in calls in arrear. Immediately company cannot forfeit. First it has to be taken a decision. Maybe they have to send some reminder and then do that. At allotment stage also they can forfeit, or at call stage also they can forfeit. But it is after the due date, after some procedure followed. So, but when the on the due date, when the money came for others, entry has to be made by the accountant. So what we can say, these calls in arrear can happen in two stages, either at allotment entry is same. I'm just trying to explain you in both the stage, or calls. Now allotment stage, what happened? First you are creating the due. The due entry we have already discussed. Now after the due, when the money comes, whatever money comes, that will go to bank. So bank account debit. Then whatever money some shareholders not paid, that will be calls in arrear. Calls in arrear account debit to allotment account. When you made the due, you made an entry that allotment account due to share capital. Now you are making this allotment entry. Whatever this is the amount received, and this is the amount not received. This is the total allotment amount. Total allotment amount is what? Number of shares allotted times allotment rate so this is your, if it is happened in allotment. If the calls not paid, same entry, bank account debit calls in arrear account debit to particular call account. This is, you should write first call, second call, final call, whatever it is. Again, this is a due. This is the amount not received. This is the amount received. This is a total call. So like that, calls in arrear entry to be made. Now calls in arrear, the company law says, if the board of directors wants and if it is permitted in the article, because the amount was due, interest can be charged. Now law has given a maximum ceiling. The company can decide whether to charge or not. Maximum ceiling is 10%. Here we should understand also the interest on calls in arrear. How interest can be charged? Interest can be charged if so provided in the article. directors have the discretion. Now, interest can be charged if articles it is provided, directors have the discretion. Now, max rate can be, as per law, 10%. As per Companies Act. It is provided in schedule. So now we are getting into the accounting part. So how do we make the entry? So when there is a interest charge, it will be charged from whom? It will be charged from the shareholders. So you can say on creating the interest receivable, first you will create the receivable, then only you can demand it. From whom you will be receiving? You are receiving from the shareholders. So shareholders account debit to interest on calls in arrears. So this is on receiving. On creating, then you have to receive the money. So on receiving, you have to get the money in the bank. Bank account debit to shareholders account. So that is the only entry. You know, these entries you can write if you just know the process, that interest to be, how it is to be charged and how it is to be collected. You can pass the entry. The similar situation will come in calls in advance also. So let us understand then. We have done the calls in arrears, so let us understand calls in advance also. Calls in advance. Now calls in advance, in what situation comes? In two situations calls in advance comes. First, if there is any over subscription, what will happen? Some people will be allotted partial because it is over subscription. Whom the company will allot partial allotment. So they have already applied for, let's say somebody applied for 100 shares and the company is allotting him 60 shares. So 40 shares application money he has given. That money, company, it is surplus in the company. What is the company's option? It has to be refunded or it can be adjusted with the future allotment and calls. Usually company does not refund upfront. This money will be first adjusted with the allotment. During the allotment only it is decided. After that also, if there is a surplus, to that extent can be adjusted with the call money. What is the call money due for those shares allotted? That much money they can hold it, and when the call become due, can adjust it. At that time, this money will be transferred to calls in advance, because calls have not been called at all. What is not called, you cannot adjust against that. So there is a account will be created, calls in advance, it will be transferred. Further surplus also there. If the amount refund is more than even call to be adjusted, that has to be refunded. Another situation is, during the allotment, some shareholders have said that, okay, another call money I have to pay, let's pay it in one go. During the allotment itself, entire money somebody has paid. Then also it is a calls in advance, that also can be transferred. So accounting entry will be same. So let's understand the accounting entry. On receiving the surplus amount. Why I am telling surplus? Because at that time it is not becoming due. So when there is a surplus, what will happen? You will take it to the bank account, but where it will be transferring? Some amount, some account you have to keep it, no, for the shareholders, because it has to be adjusted in future. So bank account debit to calls in now when the particular call become due, so at that time what will be your entry? Calls in advance account debit to this is a particular call number, you can write. I am writing particular because it will be first call, second call, whatever it is. Call account. Now here again, like the company can take interest, can pay also interest. Company law allowed that. Interest on calls in advance. So here same, if it is you can say can be paid if so provided in the article. At the discretion of the directors. Directors can decide to charge or to pay or not to pay. Now, as per law, max rate 12%. So here what you will do? First you need to create the payable on creation of interest payable what will be your entry? Payable entry. To whom it is to be payable? To the shareholders. Interest on calls in advance account debit to shareholders account now. After you create the payable, you have to make the payment. So on payment, what will be your entry? Shareholders account debit to interest on calls in advance. So like that you should make the interest entry. So calls in arrear, calls in advances are simple. If there is any arrear means somebody has not given. So we have already created a liability in the share capital. So to that extent not given, we are keeping in a separate account instead of reversing the capital. That is calls in arrear. Similarly, somebody I have called and more than I call they have given the money. That money I am keeping in a separate account. When the future call comes, we will be adjusting with that. Right now that it is not been called. If something is not been created, not liability itself not created, you cannot adjust against the liability. So we are creating it as in this advance itself is a liability in a separate account, that is calls in advance account. So simple accounting term if you think of, you need not have to bother about how the entry to be made. Interest When it is expenditure, interest debit, to whom you are paying? Shareholders. You are crediting shareholders. When it is income, from whom you are collecting? From the shareholders, debiting the shareholders. What is your credit? The income. Income is interest. You are crediting the interest. That's it. Simple. Now we'll try to understand forfeiture and issue of shares. Now, if there is any calls-in-arrears means what? Somebody has not given some shares. If not given, at some point of time, company has to take a decision. The share capital as per company law, certain period you have to close it. If somebody is not given, what they will do first? They will forfeit the amount. To that extent, money given, they will not be refunding. And the shares, the shareholders' right to the shares also will go. So shares become in the custody of the company, but the company cannot just like that reduce the capital and scratch the share. So it will be in the custody of the company as a saleable item. So when it is reissued, it is sale of issued shares. It is not a reissue is not a fresh issue. Reissue is kind of sale. The what is there within the custody of the company, and that when they sell, whatever money they have got as an extra forfeited, that money they can, to that extent, they can give discount or not, depending on the board of directors. So it is to be taken and then sold. So reissue usually happen in a process of auction sale. Shares are not paid, shareholders not given, it is forfeited. Now these shares will be auctioned to people, whoever buy one go, it will be done. In that case, again, there will be multiple tranche and all will not be happening. Installment will not happen. You'll sell it in one go. But we'll discuss first forfeiture and then we'll discuss a reissue. Forfeiture of shares. So now in forfeiture of shares, basically what we are cancelling some shareholders' right and keeping it in custody to sell. So, and to that extent, money they have given will forfeiting. Now originally you have to think of your entry can be in two parts. Somebody might have, the shares might have issued at par, 10 rupees share at 10. Share might have issued at premium, 10 rupees share at 12 rupees. So if they give the premium, the treatment will be different. If they don't give the premium, treatment will be different. So let's break into two parts. Another condition also come, but this is not part of your scope. That's why I am not discussing it. Shares can be issued at a discount and that also can be subsequently forfeited. But as such, Companies Act has cancelled this discounting procedure. They says that normal course shares cannot be issued at a discount. Only in special circumstances, promoters, share employees, they can give shares at a discount by way of ESOP. So those shares, after that forfeiting, chances are not there, and it is also not there coming in your question. So that part we are leaving it because discount is not there. So we will discuss two parts. Shares originally issued at par. Another situation, shares originally issued at a premium. These two situations. Now, if shares are issued at par, so first the amount called up, once you forfeited the shares, you are cancelling the shares, so it is called up. So to that extent, called up has to be cancelled. So that will cancel means what? Share capital has to be debited. We have already created credit and money has not come. Share capital account debit. Now we'll make the forfeiture entry here, but before that, let's understand this. In that, some allotment money not paid. So whatever not due has to be debited, has to be credited. Before making the forfeiture entry, we'll make the forfeiture entry last. First understand. First, when the allotment made, a due is created, allotment account debit to share capital. Now to that extent, some money is received, bank account debit to share allotment, some money is not received. The money not received is lying in the allotment, that we have to debit it. So to share allotment account, this is what? This is the amount due but not received. It is due but not received. Similarly, but when you cancel the shares, the entire shares to that extent called up, you are cancelled. Here it is. This amount is number of shares into amount called up per share. So whatever called up only you created a liability. To that extent you are reversing the liability. Now then similarly to call account will be there. This could be first call, second call, final call. This is also amount due but not received. Now in this some money may be, so this is the due. So because it is due, just now we learned that due amount transferred to calls-in-arrears account. If it is already transferred to calls-in-arrears, in that case calls-in-arrears also will be reversing to arrears account. This is again amount due but not received. Now here reversing the due amount, some money we have received, while we are cancelling the capital, the entire amount called up. There will be some difference. The difference is what the money actually received. That is the amount we are forfeiting. So we can say to forfeited shares account. So this is the amount received and forfeited. This is the amount we have received from the shareholders, but further they have not given, so we have forfeited. Forfeited means we have it's a profit for the company. Temporarily it's kept on hold. If the shares are, if there is, after giving a discount, if there is some surplus is there, that will go into the profit. Now the treatment of profit will not be a normal profit, we will show that. Now if shares are originally issued at a premium, in that case the same entry, to that extent share premium not received also will be reversed. So let's make the entry. Share capital account debit, securities premium account debit. Rest of the entry is same, to forfeited shares account. Then to share allotment account. To share call account. To calls-in-arrears account. I am not writing the narration. The only thing this you understand, that securities premium to that extent, if not paid only you are reversing. If it is paid, even you are forfeiting the shares, company cannot reverse it. Securities premium once received cannot be returned. Shares can be forfeited, but this amount cannot be reversed or adjusted. It will be lying in the securities premium. So to that extent, only if not paid. Capital, we are taking the entire number called up, whether paid or not paid, we are cancelling the shares. But premium we cannot cancel if it is already paid. So that will be lying. So you can keep a note of this. So if securities premium has already been paid and received by the company, it cannot be cancelled even if the shares are forfeited. So one more thing I wanted to tell you here, that in case of surplus money, when we get a pro rata allotment, some extra money we are adjusting, the adjustment has to be first in the capital. If capital portion is fully adjusted, then only it can be adjusted to securities premium. Otherwise, it cannot be adjusted to securities premium account. So this comes only in case of pro rata allotment. In case of pro rata allotment, when shares are issued at a premium, the excess amount will be adjusted towards capital first and then on securities premium. Now why this condition? See, when the money received, you also, to that extent you are not allotting, the certain amount has come. If say in the application itself securities premium also called, but that money also will be surplus. But that money, because it is on account of premium, you don't put into the company cannot put into the premium account. First they have to adjust the capital, then the premium. Now that we understood the shares forfeiture account, next we will understand reissue of forfeited shares. Thank you.